streaming this live on YouTube? Like, are you going to be streaming live? The answer is 100%. I will be streaming this. We streamed every FOMC meeting, I'm pretty sure. Wait. I got all off schedule. Ladies and gentlemen, welcome back to a Sunday Market Outlook. I'm your host, Roy Jr., full-time trader, CEO, ChartAddicts, and well, that's about it. Sunday Market Outlooks, great way to prepare for the week. You always want to be prepped so you're not making on-the-cuff decisions. Clearly, the markets are not open, and so there's not a lot that we can do trading-wise, but we can at least look at the structure, look at the trends for the previous weeks, and start to make a couple scenarios or start to plan out a couple scenarios that we can then trade during the week. So I'm going to go through the news events. We just talked about the FOMC meeting and the importance of that. And then we're going to go through, so we have GBP right here. Okay, they're going through the official bank rate. They're expecting a 25 basis point hike. So if you guys are trading any GBP pairs, this is going to be what you're looking for. Thursday is going to be pretty big. What else we have? Unemployment, home sales. All right, I guess everybody's releasing their monetary policy statements in the same week. Okay, so they're expecting no rate hikes at all, but they're expecting Jerome Powell to, keep his promise of holding rates higher for longer. So 5.5%. How are the markets going to react to this? If the markets, everything comes down to expectations. If everyone's expecting no rate hike and some kind of bullish tone or some kind of hawkish tone from Jerome Powell, then the markets are going to recover if this is what happens. Okay, even though that's negative for the economy, even though higher rates is not good, the markets will recover just based on the relief because they just, okay, this is exactly what we expected. If this comes out worse, meaning that there's a rate hike or that he mentions, let's just say he takes a more hawkish tone or a more aggressive tone than expected, then we're going to see markets crash. Specifically, I'm talking about equity markets or stock markets. So if this is as expected, stocks fly. If this is not as expected, stocks go down. But more than likely, this is going to be as expected. It's about the statement, okay, and the press conference that people are going to be watching for. But I feel like Jerome Powell is going to watch his step very carefully. He's going to say data dependent, meaning if inflation comes back, we're going to fight it. And if there's a recession, we have ample room to fight it. So nothing's really changed here. He does have to answer for the employment report, though. Back to 3.8% or 3.9% unemployment. Yeah, he's going to have to answer for that, which might not look too good for him. But we'll see. All right. We also have Bank of Japan is dropping their policy rate. Negative interest rates. Come on, bro. Oh, this is excess current accounts. What is this? Nope. Yeah, this is their short-term rate. They have short-term lending rates of negative 10%. Please take my money. I will pay you to take it. For every $100 you borrow, I'll give you back 110. Take this off my hands. Are you guys taking that money? I'd say no. I'm like, if the bank is trying to give it away, it probably ain't worth too much. Yen, I'm very bearish on the yen. Next 3 years, 5 years, I'm going to continue to go long on UJ. That's going to be the #1 trade of the century, is just UJ to the moon. Because as the dollar continues to climb, the yen is going to be the first currency to collapse. All right, you guys can clip this, hold me to it later. That's one of my predictions. All right, it's one of the easiest consensus trades probably of the century. Is just bearish yen. You guys can go back to some of the articles I wrote back in 2019, 2020. I was saying this. And just look at the trend for the yen. Matter of fact, I'll show you. Not looking too hot since 2019. Everything I wrote in that article is literally spot on. I'll put the link in the article in the description and YouTube later just to throw out the receipts. But yeah, this thing's only going to continue in one direction, people. And I feel the same way about the euro, but for some reason they're holding strong. They have a good amount of dollars in that system, so they can sustain the value of their currency. But in the next downturn, they're going to have to print more euros, and that's where the collapse of the euro is going to happen. But I'd put Japan at the top of that list. You know, why do you guys think Brexit happened? Why did Great Britain secede from the European Union? Because they were going downhill. They're overprinting the currency, putting a shit ton of debt on the future generations, and basically ruining the future chances of any economic progress. So yen to the ground, DXY to the moon. Okay, and everybody's like, well, no, at some point it's going to have to hit the highs and let me tell you guys something. The market doesn't have to go back to the moving average. It can keep going. If the whole world is overprinting their currencies, even if the dollar, even if the Federal Reserve is printing dollars, everybody else in the world is going to print more of their currency than we're going to print of ours. They have to in order to keep up. So this game only ends one way. It's the dollar is going to, that's the whole debate nowadays. Is the dollar going to go to the moon and we're going to catch on fire? Or is it going to go all the way to zero and we're going to freeze to death? I say burn before we freeze, 100%. So dollar bullish, yen bearish, you're welcome. You can trade that for the long term. What if Japan ends negative interest rates? Good for the yen, correct? Yes, it's good for the yen, but the Bank of Japan has a very tough job ahead of them. Their currency is completely collapsed. They don't have enough young people to work the economy. They have a rising elderly population. Their birth rates are completely collapsed, the worst in the world. And so they just do not have a sustainable future. So they had the bond market was collapsing, which is basically how they fund their government. People buy these government bonds, these treasuries, and they end up funding the government and paying them back in the future based on growth. Well, they don't have any growth. So what they're doing is they're printing more of their currency in order to buy back their own bonds to save the bond market. But by doing so, they're collapsing their currency. They had to choose one, save the currency or save the bond market. And they had to choose the bond market because that's how you fund the government. So they're basically ensuring the collapse of the yen by overprinting it to save the bond market. And I just don't see that. I don't see that turning. If you guys want to see my recent podcast with macroeconomist Bob Elliott, he breaks this down pretty well. I would watch that podcast for sure. Okay, so that's what we're looking at. Bank of Japan not looking too hot. We also have the Great British 25 basis point hike. Yeah. I'll be completely honest. I'm going to have to look more into this one. I'm not going to make any claims about this. Look back at one of the live streams tomorrow or the day after to see how the sentiment is, to see if this is going to be bullish or bearish. For me, I would say bullish personally because they're doing whatever they can to fight inflation and not go into the same problems that the EU is having. And in the short term, it's going to hurt their economy for sure, but they're establishing some kind of sustainable future for themselves. So I see that as a win. And I would definitely pull my money out of the euro and out of the yen and put it in the pound, just myself personally. So I'll look into that and give you guys kind of like a sentiment read on the next one. That's all I see. Flash manufacturing, all this other stuff, we'll talk about it on tomorrow's stream. Let's get back to the charts. If you guys have any charts that you want me to throw out, if you guys are on the Zoom call, let me know. I'm going to go through Nasdaq, Euro USD, gold, and UJ and UX30. I already went through Nasdaq. You guys have the price levels. 190 stops comfortably below this previous low. Now I want to point you guys' attention to something. The way I'm taking this trade is the 88.6 off of this low. So, all right, no surprise. Boom, boom, 88.6. We skipped this level right here. It grabbed all the liquidity, filled it, and as long as price holds this 186, 190 level, we're going to push all the way up. 387 is a good final target. All right, so that's all nice. But we also have this low right here. Okay. And if I Draw this out. We rejected the 78, but we haven't tested the 88.6. So it could come down to this level right here. So let's call it 1590. Oh, that's so disrespectful. Okay. So with that being said, there's two ways to play this. You're gonna have to put a wider stop below the 1590 level. So even if it comes down to hit the 88.6, okay, it'll avoid your stop loss, or just have this trade. And then if that hits stops, then have another entry or a buy alert, buy limit, or you can do a manual order if you're awake for it at 1590. I feel like this is going to be a tomorrow move though. I have a pretty good feeling about this double bottom to 15,280 trade. This is going to be my trade for tonight. You guys are going to see me post this on IG. You'll see me post this in the Discord. They're like, bro, why did he send that trade? And why did he say anything? And bro, he never says anything about the trade that he takes. And if only he was on a live stream in front of people publicly saying exactly which trade he was going to take. All right, under the conditions, obviously, guys. That doesn't mean, if this thing completely breaks through with a solid candle, I'm going to enter. Right? Clearly, I have a confirmation checklist. ChartAddicts members, you guys know this, but this is the trade I am looking for: 190 to 286. Conservative take profit, set at 10 points, 15 points lower than where you think it should be, just for spread, slippage, and whatever type of bullshit the broker is going to try to do. Got it? Okay, structure is still holding, higher lows are still forming. I understand that, the markets are looking bearish, but until the levels break, the trend is your friend until it ends. And it only ends when the market structure breaks. It's live on YouTube. All right, let's do gold real quick. Well, that's convenient. Well, I always tell myself if it's too good to be true, it probably is, but sometimes it really just is that good. Oh, also a slight reminder, we're hosting a Nasdaq boot camp October 1st to the 3rd. It is limited amount of seats and there's only 5 days left to register. The link is in the description on YouTube if you guys are watching. Full 3-day masterclass if you guys want to learn how I trade Nasdaq from start to finish. Sometimes it really is that easy. All right, I'll tell you guys a little thing. I'm about to draw a fib here. It's the last fib I'm drawing. Some of you guys were like, what the hell is he doing? Hey, all right, it's been a long day. I'm just going to show you guys the trades. So there's a local area of structure right here. Kind of like where the market retested and formed support right before it pushed up. I'm going to draw a fib from the bottom of this to the top. If this is the 78, we got ourselves a fucking trade here. Okay. Oh my God. Let me remove this. I'm going to draw a fib from this structure here to here. And if this is the 786, we got ourselves a trade. Flag retracement, continuation. Also inverted head and shoulders. You guys get the drill. Also, previous daily support. Come on now. Oh, wait. One more. Yeah, 1912. Oh shit. Okay. So I don't trade gold, and so this is one of those judgment calls where I'm like, okay, this one could go either way. The way I would trade this is just take both trades. So literally like this. That's trade one, which is 1919. All right, so we have another area of structure right here. The market made an impulse to the upside. And so if it creates a higher low, then that's just going to be the structure that it needs to continue. But if it breaks this area here, a lot of people are going to start to short sell. Okay, in which case 1912 is going to be the entry. So mark off 1919 and 1912 on your chart. For take profits, you're looking at 1930 and 1936. Like, Roy, is it that easy? Could it really possibly be that simple? The answer is yes, it can. Here's the other trade. 786. Here's that area of structure. Stop loss below the low. Okay, TP1 is 1-to-1. TP2 is about 1.5-to-1. And then TP3 is the previous high, which is close to 3-to-1. Got it? Any questions, comments, concerns? We good? Awesome. Let's keep it pushing. DXY. Should have gone through the DXY first, but you guys get the drill. I'm going to zip through the rest of these, kind of a little bit past time here. DXY is still pushing. When the magnet is out, there's nothing I can say. The deal is done. It's sealed. Signed in blood. It's there. 107.5. That's where the market's headed. I have no control over this. All right, I'm very bullish on the dollar. I told you guys this from a fundamental standpoint. It makes sense. From a technical standpoint, bullish on the dollar. However, when you come across a brick wall like this, okay, where this area is inviting massive sell liquidity, massive. When we get over here, be very careful. Not careful in the sense of like, oh, I wonder what's going to happen. No, careful in the sense that like, yes, the market momentum is very bullish and most likely could continue bullish because nothing's really changed until the Fed meeting. But as we get to this area, the closer you get, you're going to start to see these sharp retracements. So if you're trading Euro USD or GBP US, any dollar pairs, you're going to see these wild fluctuations this week where you might be buying UJ and then it hits a brick wall and starts to retrace sharply or just breaks through and just goes ballistic. So use the DXY as your guide, kind of like your guide marker. As it gets up into this green zone, look, Euro USD, right now we've been shorting it. Expect that Euro USD to start retracing. This is where we can finally get those buys on EU. All right, coming up close, 105.8 is my next area of interest for the DXY. I'm expecting a breakthrough, retracement, and continuation. This will most likely happen around the Fed meeting. This buildup before the Fed meeting. Okay, good stuff. All right, so I'm looking at the daily here on Euro USD. We had a break above the highs. Okay, price came all the way back inside the range, and I'm expecting something similar to what we just saw on Nasdaq, where we're going to break through this level, hit an area of interest, or even potentially hit the bottom of the range, and then retrace back up. This lines up perfectly with what we were looking at for Euro USD. Euro USD is about to hit a brick wall in reverse. This thing is looking to hit a brick wall in reverse. What is that brick wall? That could either be the fact that it's maintaining these lows, or it could push down to this daily zone here before we come back up. Huh. Five, 9, 9, 5, 8, 2. Yeah, okay, this is pretty straightforward. So we're still technically holding that double bottom. And so the market, if it retraces back up and closes back above, what is this, 1.07, then I will just look for a smaller time frame retracement, probably the 4-hour, and then buy it up. More than likely, it's going to consolidate and then push down one more time before it comes up. Again, probably lining up with the Fed meeting Tuesday or the Tuesday night London going into Wednesday. So I'm looking at this double bottom. I know that the market's bearish, but it could be a good chance for us to catch this retracement back up. And so that's what's on my radar for Euro USD. All right, and then last but not least, we have UJ. Clean this up. Awesome. So safe to say we've established a new floor here. So we have resistance, we have support right here. These are looking good. Get rid of this one. Get rid of this. So UJ is creating very simple structure. We have lows getting higher, and then we have highs getting higher. This thing is just simple break and retest. That doesn't mean that, again, because the dollar is about to hit a brick wall, we could very likely see a pullback, a very sharp pullback this week before we get a continuation. So that's that's in the books. That's in the books for sure. As we get up to the top of the range, you're going to look left at the historical data on the left to see where are the most likely areas of interest. Okay, so whenever the market hits like what we call the premium, it'll come in and reestablish that retest here. That's going to be your new resistance. We have one, and then this massive sell that happened was off of that zone. As we get up into that zone, this is where we're going to look to see that retracement. 148.7. Maybe put that up. Mark this off. This is a good one. 148.7. So from premium to discount, go all the way through. Interesting. One 44.46. Yeah, I don't even know why I'm doing. Okay. The levels are already here. I was just double checking something. Here's the levels for the week: 148.7, 146.5, 0.5, close enough. And geez, if we break above, we got an open road. We'll just go straight. You just psych levels at that point: 150, 151. Take them one by one. Let's get down to the 4 hour real quick. See if we can find a potential entry here. Okay, so here's the previous high, had that nice push down, and then we've just broken above. So whenever there's a break above, you know that's buyers establishing bullish momentum. But the problem is a lot of people tend to enter too early. So just because it broke above, all the breakout traders are looking for this break, retest, continuation. And so what it'll do is market will typically form that support, push up, everyone starts to chase that momentum, and then it will come in for a retracement. So 60, actually, here's the sum. $147.25. Let's call it 147.3. 147.3 would be a good re-entry price for USD JPY. Okay, now ideally we would like a deeper retracement. Like if we could get a full retracement, that would be ideal. But in my humble opinion, if we get that full retracement down here, yeah. Well, I guess this is a swing trade, so it might even be worth extending that take profit. Okay, hold on. We do 1.61. Okay. So with the way this trade currently is set up, we have about a 3-to-1 R. Okay, because I'm looking at this move down. The market broke above. I'm looking for a retest of that 70% for the continuation. So that's going to be the first trade. The second trade, or sorry, the second idea would be just to extend the stop loss. So that even if the market comes down to grab this area of liquidity first, comes in deeper, it'll still miss the stop loss. 113 pips? Yeah, no thank you. Yeah, I'll do 50 pips for 165. Yeah, I'll do that one. And then tomorrow, if the market's kind of sitting around this range and it doesn't push back up, just go ahead and close the trade and we'll just re-enter it right down here, 146.7. But this is the trade opportunity I'm looking for. Keep in mind, the dollar is about to hit a brick wall. It's about to hit that ceiling and start to retrace. And so if we do take this long position, I'm looking to secure my partials and I'm looking to move my stops to break even ASAP before this thing reverses on me. Got it? Momentum's bullish, trend is bullish, everything's looking good. But the closer you get to resistance, stop buying. Or if you do buy, be very methodical about how you do it. He said you need a mic. He says, bro, it sounds like you're talking in a bowl. Yo, fuck. Do I turn over a new leaf? Suck my dick. How about that? This is why I'm going to get kicked off YouTube. They told me I should go on Twitch or Kick. I want to hear having a great call, 45 minutes. Whoop, whoop, everything is great. This guy's talking about it. Sounds like I'm talking in a fishbowl. I didn't even say fishbowl. I just added that in there, right? So I can think about it later. Be like, oh, the haters. They say I'm talking in a fishbowl. Bro, I'm working on it. Take the fucking trade. Buy me a mic. Take the trade. Buy me a mic. Send it to me. What do you think about that? I have fucking 4 mics right here. I don't want to set them up. I'm trying to trade. I'm trying to show you guys this value. Or I could have spent 25 minutes setting this shit up. He said, don't get mad. I'm about fucking, this whole thing's about to pop off. All right, all jokes aside, ladies, gents, that's the end of the Sunday market outlook. If you couldn't tell, have an incredible week. Happy and safe trading. ChartAddicts members, stay in the chats. If you guys want to stick around, talk, current topics and just shoot the shit, let me know. All right, we'll be hanging out here. Take it easy, y'all. I'll catch you later. If you're still on this live stream, let's just kick it for a little bit. Ask me questions about whatever. Did I go over GJ? No, I do not trade GJ. I have not looked at GJ in a long time. Matter of fact, no, I'm not even going to do it. All right, that's called restraint. I have no interest in being a part of this GJ. Nah, so many better pairs. I'm good. Max said Gulag. No, there was another dude, Max, that went straight to the Gulag. What's his name, bro? US 30 legend? Bro. He knows how to get under my skin. He just gets on there. He's like, oh, you're a podcaster. Bro, you're a fucking podcaster. He just knows how to chirp. He knows it gets me pissed off, but he's looking for attention. Bro, I just fucking sent him to the Gulag straight. It was silent. I don't even know if you guys caught that. I got on there, saw it on the YouTube. Boom, boom, hater. I said, click, click, remove. Right? I didn't engage. It's called growth, Max. I know you can be proud of me, bro. So not everything needs a reaction. But sometimes people got to get put into place, man. Sometimes get fucking people just talk reckless on social media and on YouTube and whatnot. What's my thoughts on FOMC this week? Mike, look, all jokes aside, bro, I do appreciate it. Yeah, I get it. I know. It sucks. I'm going to fix it. What's your thoughts on FOMC? My thoughts are that there's going to be a meeting this week. That's what I think. Which days do you stream New York? Good question. So this week I'm going to stream Monday, Tuesday, and Thursday. Monday, Tuesday, and Thursday. All right. Now, I will have to give you guys some kind of disclaimer. These streams are going to get a little bit wild. Because if I'm going to do these streams and I'm going to you guys got to understand, I'm putting my money, my reputation, my mental health, the reputation of ChartAddicts, the brand, all the great things that we've done, I'm putting all of that on the line every time I call a trade. So if I'm going to do that, I'm going to do it in a way that's at least fun for me. Meaning I can't be out here holding back. I can't have the team texting me, yo, bro, you can't tell people that if they failed 30 challenges, they got to fucking quit trading and they fucking suck. You can't say that. Bro, yes, I can. And those are the kinds of streams that you guys will be signing up for. So I'll give you guys 2 guarantees about these streams. The guarantee is whether there's 20 people or 2 million people watching the stream, I'm going to give you guys the same energy. That's my promise. My second promise is I'm going to find the most quality heater trades that I possibly can, show you guys the same exact trades that I would take at the market open. And you guys just take them along with me. Learn about the patience by doing it with me. Well, let's walk through this together. You've never held a trade for longer than an hour. Well, good morning. Let today be the day. And the third guarantee, I know there's going to be 2. A third guarantee is that I'm going to say some outlandish shit. And I'm not going to say it for the sake of saying it. I'm going to say it because it's true. But people tend to perceive the truth as being outlandish because a lot of people tend to live in delusion. That's my guarantee. So if that's what you guys want to sign up for, hit the like and subscribe so you're notified when we do those streams. Monday, Tuesday, Thursday. Am I going to stream the FOMC meeting? What is it? But of course I'm going to stream it. But you won't know unless you're subscribed and the notifications is on. All right, so I'm just telling you guys the truth. For sure, do it on YouTube. Let's go. Mike, I'm going to get a fucking microphone by then. How about that? Which pairs am I going to be trading? Nasty Nas, baby. And also any other dollar pairs that set up. Here's my playbook is that I swing trade currencies based on those higher time frame trends of the central banks that I talked to you guys about about 52 minutes ago when none of y'all were paying attention, but I said that. Some of y'all just remembered it, so you were paying attention, but you didn't remember it because you didn't take notes, but now you did remember it, right? So I swing trade currencies because of these central bank trends that happen on the higher time frames, and I day trade nasty Nas 100. The rule about nasty Nas is show up every day, but don't trade every day. How do you stop yourself from trading if you're on the charts? Grow the fuck up. That's what I got. Y'all, I'm under the weather, bro. I sound like I'm fucking sick and whatnot. Let me get off this stream so I can save my voice for this week. Crush it. Happy, safe trading. Woo, woo. If you guys bring some negative energy to the fucking streams, gulag, we're bringing those back. And yeah, I'm going to catch you guys later. Take it easy. Peace. All right.